Hello out there in cryptocurrency land. Welcome back to Real Crypto. Thank you for joining me again today. Okay, so my particular style of trading, I actually like to trade for the longer term. Okay, I like to take moves in Bitcoin that would take us from like 10,000 to that 15 or $18,000 target that we've recently been discussing. Okay, the shorter term trading kind of comes out of that price action just put onto a lower time frame. You can look at the charts in the smaller time frame in a very similar manner that you can on the longer time frame. On the longer time frame, it still looks pretty bullish here. We still look fairly bullish. The only problem that I have, which is a decent problem to be quite frank with you, is the overall volume signature. There's just a lot of red in almost any time frame that you look at. Go to the 6 hour, there's a lot of red. When you go to the daily, there's still quite a bit of red. There's still quite a bit of red even on the daily. Even on the daily. Going down to the 15-minute. Got to zoom out here a little bit. I guess that's all I'm getting there from Coinigy here. Quite a bit of red, obviously on the way down. And on the way up, we don't have as much green as we would generally need to sustain a large uptrend. Okay. Now, while we have been going up, we've been stair-stepping higher. We stopped stepping last night basically, and we've since reversed and put in what could be a higher low, which would be fine for the move going forward. But the volume over here on the right side is very weak at this point in time. Okay, it's pretty weak. It's pretty weak. So we have mixed signals right now. We actually have a choppy market. We have a choppy market, and right now that choppy market has given us a slight uptrend. We just recently came from a downtrend, so let's back out to the 2 hour. Okay, we're not necessarily quite range bound. We're not quite range bound yet, but we do have a choppy market. Okay, so we had a move here, we came down. We had a move up, we came much further down. Now we had a move up. More than likely, we're going to head down and then up and then down. And there's going to be tradable ranges in here, but it's probably not going to be very cut and dry unless you're used to trading reversals. If you're used to trading reversals, then this will probably be a market that you can make some pretty good short-term trades on. All right, some pretty good short-term trades. But past that, it's probably going to be difficult to get some really longer sustained moves in Bitcoin unless we have a big change in events and we get more green volume coming in, a lack of red volume, and the situation generally changes. So, there's been a lot of fluctuations in the market recently, and that's because I believe we've entered a choppy market. For those of you that took my market cycles webinar, you know what that means. Okay. Now, something else that I've been going back to, because we've been so indecisive in the markets, I've been going back to my original presumption based on the 2013 scenario. And if we go back to the 2013 scenario, now this is a daily chart, and this is a 2 hour chart. And what we notice here is that we haven't on a larger time frame. Now, we talked about having this pattern make a higher high, and I use this as my higher high point. That is your initial higher high point. This would be a real higher high. So this is a high, this is a high, this is a high. Okay, this is another version of a high, and this is really not a high. This is a peak, but I wouldn't consider it a high, if that makes sense. That may be a little too in the weeds for many people. But we tested this high level here and we failed. Okay? And we failed and continued lower in pattern. Okay? So overall, we're not completely out of the woods yet. When I compare this to 2013, what strikes me actually is this very similar pattern that we have here. We have a spike low, the ultimate spike low for what looked like the ultimate move to the downside here. And volume is not confirming any of this. Volume is completely different. This is strictly based on price action. Strictly based on price action. So we had the spike low, and then we had a nice run up, and this run up was also about 100%. 100% run up leading to the prior high. And then we came down, tried to go back up again, failed, and then slowly declined. I'm curious if that's what we're going to get into here. Now, albeit this is the 2-hour chart and this is the daily chart. There are differences. There's always differences, ladies and gentlemen. History never repeats itself, but it often rhymes. Okay, and this is just some more rhyming action. I was looking on the daily chart for something like this to occur, and it basically broke that pattern. If you go to the daily chart, it looks different. Maybe not that much different. Let's see if I can kind of get the bars to line up if I can. Well, the one thing that is definitely different is the time scale. The time scale that it took for this peak over to this peak is 185 days. We're definitely well under 185 days. We're talking like, I think it's like 50, 60 days. Yeah, 66 bars instead of 185. So the cycle appears shorter this time around, but the pattern seems fairly similar. It seems fairly similar. We have a high, we came down to the most recent ultimate low, we bounced, went 100%, had a little kind of a cup thingy, and then we just slowly rolled over and failed. We could be in for something like that here, ladies and gentlemen. Could be in for something like that here. The moving averages don't line up, but just going off of price and the overall lack of bullish participation in this most recent rally, we went up 100%. That's fantastic, obviously, right? But volume increases to the sell side here, and then we're trying to rally, and volume is still decreasing. Volume is decreasing from these highs over here, indicating this trend is still in play. So that's what I'm noticing in the charts. Take it for what you will, ladies and gentlemen. Use this analysis with the other people that you follow in your own analysis, which is probably some of the most important analysis that you can do, and try to come to a conclusion. I was kind of hoping this would look more like Ethereum mid last year than it did Bitcoin 2013. We're coming to the point where we're like 50-50, guys. We're like 50-50. We can go either way. If you take this trend line to its ultimate resolution right here and you zoom out, we still can get some kind of a V pattern, but if this fails us and we continue lower, I mean, obviously that's a different story. But anyway, I just want to put that out there. That's what I've been looking at, trying to make sense of the most recent action in terms of, history from 5 years ago. May not seem very relevant, but believe it or not, it is pretty relevant due to the fact that human nature never changes. Human nature never changes. We wanted bullish action on the break of this 50-day. We didn't get it. We wanted a lot of things that we haven't gotten lately. So grasping at straws, trying to make a market out of it, I think is risky right now. I think your accounts are going to be at risk if you're trying to grab every straw for a bullish scenario. I think if you're trying to grab every straw for a bearish scenario, you're also going to be disappointed. I think we're going to be choppy, and we may even just start to float lower. If you look at 2013, it was very, very slow and weak action. We just kind of floated lower, if you notice, with no real. We had a couple of spike here and then a move down, and then just continued lower. So this is hope right here in 2013, and this is hope dying. This is hope dying. So are we ultimately going to get to that low of $3,500 in Bitcoin, which would be the 83% drawdown? That would be the 83% drawdown in Bitcoin, which this pattern ultimately went to. This pattern ultimately went to an 83% drawdown. It's possible we get to that 3,500 level. It's highly possible. Highly, highly possible. So, all right, ladies and gentlemen, there's the video. I could go on for longer, but I'm not going to. I've already gone on for long enough. Thank you for joining me. Please let me know if you agree or disagree, what your thoughts are on the markets. I wouldn't mind some opposing opinions right now. Sometimes getting out of your own head is a very good thing, and I would appreciate your input. So thank you, ladies and gentlemen. I'll see you guys next time.